What if the market just gave us the clearest signal of the next major crypto expansion phase, and most investors are still distracted by fear in global markets? Right now, Bitcoin has done something technically and psychologically powerful. It has pushed back above the $70,000 level, one of the strongest psychological zones in this entire cycle. And when Bitcoin reclaims a major psychological level after weeks of uncertainty, it's not just a price move, it's a message. Let's break this down carefully, step by step. Bitcoin, Ethereum, altcoins, technical structure, liquidity, macro pressure, and what needs to happen next for a move toward $90,000 to become realistic. At the time of this analysis, Bitcoin is trading around $71,169. That places it near the upper boundary of its recent consolidation channel. For weeks, price has been compressing, forming a structure of tightening volatility. Now we're seeing early signs of a potential change of character in the market structure. A change of character simply means momentum behavior shifts. Instead of printing lower highs and struggling at resistance, price begins to reclaim key levels and hold them. That's exactly what reclaiming 70K represents. Why is 70K important? Because psychological round numbers in crypto markets act like magnets. They attract liquidity, stop losses, leverage positioning, and emotional decision-making. Institutions understand this. Smart money understands this. Despite global equity markets showing fear and metals like silver declining, capital rotation appears to be favoring Bitcoin. That tells us something critical. Bitcoin is being treated more like a macro hedge asset again, rather than just a speculative tech trade. Now let's talk about funding rates and ETF inflows. Yesterday, Bitcoin was already registering positive funding rates. That means traders in the perpetual futures market were willing to pay a premium to hold long positions. Positive funding is not always bullish, but when combined with spot demand, it becomes meaningful. Even more important, all 12 active Bitcoin spot ETFs showed positive inflows. That signals institutional accumulation rather than retail hype. When ETF inflows align with rising price, that's structural demand. Interestingly, this move is happening while the US dollar remains strong. Historically, a strong dollar can pressure risk assets, yet Bitcoin is holding up. That relative strength matters. Now let's zoom in to the key technical zone. The immediate resistance sits around $76,000. This is where the EMA 50 on the higher time frame is positioned. The 50-period exponential moving average often acts as dynamic resistance in corrective phases. If Bitcoin can break above 76K with conviction and volume, that opens the pathway toward $90,000. Not instantly, but structurally. However, we must discuss invalidation. If Bitcoin fails between 70K and 76K and begins printing bearish rejection wicks, lower highs, and declining volume, that would signal a bull trap. In that scenario, price could rotate back toward previous wartime price levels, meaning deeper retracements into the mid-60K region. So this zone right now is critical. It's not just another move, it's a decision point. Now let's transition to Ethereum. Ethereum has finally reclaimed $2,000 after spending the entire week trading below it. That's significant for sentiment across the entire altcoin market. Ethereum currently holds a market capitalization near $250 billion, making it the second largest cryptocurrency globally. Reclaiming 2K places it back above both its 7-day simple moving average and 7-day exponential moving average, short-term trend confirmation signals. Holding above 2K is essential. If buyers defend this level, the next technical target sits near the 23.6% Fibonacci retracement zone, around $2,240. Why does this matter? Because Ethereum often acts as the bridge between Bitcoin dominance and full altcoin expansion. When Bitcoin stabilizes and Ethereum strengthens, capital typically rotates into higher beta altcoins. And we're already seeing early evidence of that rotation. XDC has surged to a 2-week high after bouncing strongly from $0.0364. That type of rebound shows buyers aggressively defending support. Morpho is trading around $1.96, continuing its rally after posting approximately 67% growth over the past month and modest gains over the last 24 hours. This growth has coincided with increased network usage and a spike in total value locked, alongside a rise in ETH token activity compared to last year's lows. BNB has pushed above $650, showing signs of attempting a breakout from its lower consolidation range. XRP, Solana, Litecoin, Hedera, Uniswap, Polkadot, BitTensor, that is TAO, and Near Protocol are also printing positive 24-hour performance. Across the top 10 cryptocurrencies, we're seeing an average growth rate of roughly 5%, and short to mid-term sentiment is turning bullish again. But here's what we need to understand carefully. A bullish phase does not begin with euphoria. It begins with disbelief. Right now, global macro uncertainty still exists. Equity markets are nervous, commodities are volatile, yet crypto is stabilizing and pushing upward. That divergence is important. Let's discuss liquidity. Crypto rallies require liquidity expansion. That can come from three sources: spot ETF inflows, derivatives positioning, and retail momentum. We currently have confirmation of ETF inflows and improving derivatives positioning. Retail momentum, however, appears cautious, which is actually healthy. Parabolic rallies fueled only by retail tend to collapse quickly. Structural rallies fueled by institutions are slower but more sustainable.
Now let's examine Bitcoin dominance. When Bitcoin breaks major levels first, dominance often rises. Then once stability forms, capital rotates into Ethereum and then mid-cap altcoins. The early signs of Ethereum's strength suggest we may be entering phase 2 of that rotation. But again, everything depends on $76,000. If $76,000 breaks, short sellers will be forced to cover. Liquidation clusters often sit above major resistance zones. That can create a squeeze effect, a rapid acceleration upward. From $76,000, momentum toward $80,000 becomes technically open. And above $80,000, the psychological barrier of $90,000 becomes the next magnet. However, if we see rejection, increasing open interest without spot demand, and declining ETF inflows, caution becomes necessary. Let's talk risk management for a moment. In volatile conditions, chasing green candles near resistance can be dangerous. Confirmation requires strong volume breakout above resistance, retest and hold of broken resistance as new support, and continuation structure, higher highs and lower lows. Without those confirmations, breakouts can fail. Now let's zoom out further. Long-term structure. Bitcoin's macro trend remains upward on higher time frames. Even with corrections, the overall cycle structure has not broken. What we've seen recently is consolidation within a larger uptrend. Consolidation is not weakness, it is energy building. Think of it like compression before expansion. The tighter the range, the stronger the breakout, in either direction. And this is why this current zone matters so much. Ethereum's reclaim of $2,000 supports the bullish narrative, but Ethereum must now defend that level consistently. If ETH loses 2K quickly, altcoins could fade again. Meanwhile, altcoins showing strength must sustain volume. Short-term spikes without volume confirmation often retrace. Let's also consider macro drivers: interest rate expectations, dollar strength, ETF regulatory stability, and institutional allocation strategies. If macro fear intensifies, Bitcoin's hedge narrative could strengthen. If macro stabilizes, risk appetite could boost altcoins further. Either way, volatility is coming. Now here's the bigger psychological layer. When markets move from fear to cautious optimism, price often climbs a wall of worry. That means rallies happen while headlines remain negative. Only later does media sentiment flip positive. We may be in that transition phase right now, but patience is key. A confirmed break above $76,000 changes short-term structure. A hold above $80,000 strengthens midterm momentum. A push toward $90,000 redefines cycle expectations. Until then, this is a developing breakout attempt, not a confirmed expansion. Ethereum above $2,000 strengthens the narrative. Altcoins showing coordinated green candles suggest risk appetite is improving. ETF inflows provide institutional backbone, but resistance has not yet been fully cleared. So here's the question every serious investor should ask. Is this the beginning of the next leg higher, or simply a relief rally before another pullback? The answer will be revealed in how price behaves between $70,000 and $76,000. Watch volume, watch ETF flows, watch funding rates, and watch reaction at resistance. Markets don't lie, they reveal. If Bitcoin holds this structure and breaks cleanly, $90,000 is not unrealistic from a technical perspective. If rejection occurs, patience will once again be rewarded. Right now, momentum is shifting. Ethereum is waking up, altcoins are responding, institutions are accumulating. But confirmation is everything, and the next move could define the direction of the entire quarter.